Good morning and greetings for the day. The topic for HOLT Community Competition is expansion into overcapacity. Is it winning strategy or value destructor? I have chosen Nippon NYK Line, commonly referred to as NYK Line. Let's look into the current market scenario. Major carriers have started to increase their capacity by acquiring ultra-large ships in order to gain market share, leading to overcapacity and falling of prices. Drop in oil prices has caused shipping costs to fall. Ever since 2008 and 9 slowdown, the condition of the shipping companies have been quite volatile. Cash-strapped carriers are concerned more about their financials and business strategy. Total fleet of NYK lines as on the year ended March 31st, 2015 is 832, out of which it operates 104 ships in the container shipping industry. Total revenues by industry segments of NYK lines as on the year ended March 31st, 2015 is shown. Analyzing the total revenue of NYK line by segments, container shipping industry accounts for 27.8% of the total revenue. The performance of the company can be found using the relative wealth chart, sales growth, margins and asset turns. On getting into the performance of the company, the relative wealth chart shows that the CFROI level was less than the discount rate, which led to the destruction of the wealth. The company experiences this negative spread right from the year 1994 to 2014. Therefore, strategies for shareholders' value creation is done by increasing CFROI, reducing reinvestment, or divest or liquidate. It is evident from the relative wealth chart that the company was growing aggressively, thus destroying shareholders' wealth right from the sluggish year 2008 and the economic downturn in 2009 till date. The company tried to increase shareholders' value by creating asset growth by changing its strategy in the year 2010, but it couldn't sustain the strategy. The CFROI went below the discount rate, causing the stock performance to suffer. NYK Line's total TEUs as on December 14, 2015 was 5,05,192 TEUs. It had 1,40,000 TEUs in its order book. HOLT debt includes book debt, pensions, leases, stock option debt and preferred debts. It can be noted that NYK Line had a debt of 3,500 billion when compared to the industry median, which lies below 100 billion. This shows that the company could fall on a debt trap, a situation in which the debt is difficult or impossible to repay, typically because high interest payments prevent repayment of the principal. Suggestions to the Board of Directors. Strategies for value creation. Expansion into overcapacity with ordering of new ships will definitely be a value destructor for our company, as we hold a lump sum amount of debt compared to the industry average. We should consider scrapping of old or aged ships, identification and tapping of new routes. Learning about strategic ties between two nations would be helpful in this regard. For example, deal between India and Japan on shipping of bullet train components from Japan. The above suggestions will help us to increase our CFROI levels and recover our company from negative spread to neutral spread. Growing assets. We should consider addition of more chartered ships on lease with high volume capacity to our fleet rather than owning it. To increase market power, we can concentrate on small-scale mergers and acquisitions, joint ventures and alliances on smaller routes since all the major trade lines are already dominated. We can increase our market share with high value-added business and stable freight rates. We could set up a new separate firm and register our new ships in countries which offer lower taxes to shipping industry sector. The Board of Directors can think about setting new separate firms either at shipping incentive regimes or at favorable tax regimes.